And on behalf of the Commission, we do apologize for starting about 26 minutes late. We had promised to start at 8:30. We have had a bit of a challenge, our computer systems, because of power backup. I'm still waiting for a printed speech. I was about to start reading from the computer itself. Out of but I do recognize one person who was here even before me, like 7 hours. What time did you come? 7:10. I was like, okay, this is the great dedication that we expect. Now, one of the most important stakeholders that we have in trying to develop the market is the media. And that's why we've continued to have these media briefs after and every quarter, as it were. So, like I said, colleagues from the media, other stakeholders, and through our online platform, the public, welcome to the first quarter briefing. This is quarter one of 2025. I think the Commission reaffirms its position to share capital market information with the media, and we hope that together we can build confidence in the market. A bit of digressing from my written speech is the fact that I think through the media we learned yesterday that Stanbic is funding about $70 million of a ZESCO plant in December. That's solar. That's what the financial sector is all about. Financing long-term development in terms of infrastructure. We are very, very excited as we continue building this relationship. And just as a preamble, we expect a lot of questions from you that we can answer so that the public becomes aware of what is happening in the capital markets. Now, to start this background, you get to see long-term savings by long-term investments. Just an example that I've given of a Chisamba solar plant. So our macroeconomic context is slightly different from what you'd expect from our other sister regulatory agencies. We concentrate mainly on three things: the inflation rate, interest rates in the money markets, and the stability of the exchange rates. And I'll explain why we have such a specific concentration. I'll speak about each one of those three factors. If I brought in $1 million as a foreign investor in Zambia, of course, I have a right to take out that money, right? So the stability in the exchange rate becomes extremely important. Imagine that I bring in $1 million at an exchange rate of 10. That means if I need to take my 1 million out, the exchange rate has to be very, very similar to the 10. Otherwise, I lose out without doing anything. So stability in the exchange rate is absolutely of necessity. And we've seen that in the last quarter, generally speaking, the rate of depreciation has not been as we observed before. I think it's been quite stable. The other factor that we look at is that gets to affect long-term investment is inflation. Again, as reported by the statistics authorities, I think we are seeming to tapering off in terms of the movement of inflation. Again, why are we talking about inflation? if you have invested in fixed income securities, fixed income security means your return is fixed. Let's say you buy government bond giving you 20%. If inflation goes up, that means you are losing out on a 20%. You are no longer making 20%, you are making 20% less the inflation rate. So the stability or lower inflation gets to help long-term investment. So people are likely to invest long-term if inflation rates are stable and trending towards going maybe within the 6 to the 8 band that the central bank set up. So I've spoken about the exchange rate, the inflation rate, but the money market rates. So the short-term market rates get to affect long-term investments. If the short-term money market rates are higher than what you can get in the long-term investments generally, and logically speaking, people will then tend to invest short-term. So investing in long-term infrastructure requires that we have lower money market rates. And generally speaking, you would see that there's an inverse relationship between capital market performance and money market performance. If the money market rates are high, people will just shift their money from stocks and bonds into the money market rates. So again, we've seen that the rates have been dropping, the yields on government paper has been dropping, which should be able to help the development of capital markets. So during Q1 of 2025, we saw inflation reduce from 16.7% to 16.5%. This is data from the statistics authorities, not our data. So that 0.2% reduction in the change of inflation appears to signal that inflation is likely to be going down, which is good for capital markets and for long-term investments. As I talked about the exchange rates, we saw that at the end of March, which is the end of the first quarter, we saw that there was a small depreciation, the 3-kwacha, or 1.06%, and this is what I was talking about, the stability in the depreciation of the kwacha, which is good. And then, on average, the 10-year government bond was had a yield of 22.49. If you recall, 3, 4, 5 years ago, we were almost getting to the 30s, which is almost impossible to attract money into the long-term investments. So with the background set, the macroeconomic background as it is specific to capital markets, let's see how the capital markets themselves did perform given those factors that we've already talked about. So one of the first sectors of the capital markets that we speak about is the equity market. This is where securities such as shares have been listed on the Lusaka Stock Exchange. Remember that Lusaka Stock Exchange is the only licensed operating market in Zambia. And some of the factors that we monitor is the value of all the listed companies on the exchange, which we call market capitalization. It's just basically the market value of all the securities listed on the exchange. So during Q1 2025, there was an increase in market capitalization of 19.31%. That is massive for a 1-quarter increase, signaling that if you had invested in a broad range of securities, you would have achieved such kind of growth. So we were seated at 257.8 billion That's the value of securities listed on the Securities Exchange, which is the LUSE. In terms of how do we see the size of the market, most of the things are compared to the size of the economy or the GDP. So in terms of market capitalization or the value, the total value of securities listed on the exchange compared to the size of the economy, we were seated at 46%, which is where what we predicted in our long-term master plan. So 46% is the ratio of the value of securities to the entire economy. So the economy is about $28 billion. So 46% of that is the value of our securities. So we are getting there, not yet where we want to see the size of the capital markets. So some of the contributors to this improvement in the market capitalization, I'm just mentioning some, the top three. Please quote me correctly, some, I'm not saying all, but when you do receive the entire media brief, you'll probably see other stocks in there. So on top of the list, Airtel went up by 72.4%. So which means if you are the one kwacha invested in Airtel, by the end of March you are seated at one kwacha 74, right? If I still remember my one mathematics, it went up 27%, and Zamefa went up by 19.8%, Zanaco 17.3%, and Zafico by 16.7%. That's quite some increase in 3 months, because we just comparing if you had this particular stock at the beginning of January, by the end of March, you would have had that sort of an improvement in the stock values. We have another metric that we use now to see the entire performance of the LUSE. So there's an index which is called the LUSE All Share Index, or LASI. It rose by 5.9%. So assuming that you had every security listed on the LUSE, you would have gone up by almost 6%. Now that doesn't sound like a lot, but this is in a quarter. So if it continues growing at that rate, which means by the end of the year you would have done almost 6 by 4, 24%. This is on the assumption that that growth continues. So that's quite comparable, if not higher, than you would get, for instance, on bank deposits. Since you, the journalists, are well versed with the statistics, I'm sure you know how much your deposit account gives you in terms of interest. You'll be able to see the details of how the LUSE All-Share Index, or LASI, had moved from about 15,440.9 points at the end of December 2024 to 16,378.87 points at the end of March 2025. So this has continued. We have a graph in the detailed write-up that will show you the movement of the LASI. That compares with the movement in other indices, including the Kwacha Dollar Index, which we have been tracking since 2006, so almost for the last 20 years. The other sector other than the equity market that the SEC is charged with is collective investment schemes. These are called the mutual funds in other markets. The collective investment schemes assets under management. So this is like equivalent to deposits if you are talking about the banks. This grew by 144.4 million, moving to 3.1 billion. So which means we were seated at about 2.5 or so at the end of December. Our capital market master plan long-term target is to reach a total of $170 million equivalent. I'm sure you have to do the math. 3.1 divided by something like 28. You can see how we have moved towards the long-term target of $170 million at the end of 2027. The other metric that we track is how is the public participating in this particular product. So I'm happy to report that new investors totaling 144,000, that's quite a lot of people, 144,000 new investors put their money in collective investment schemes within the first quarter of 2025. We are now seated in the capital markets, inclusive of these collective investment scheme participants, at 955,825 single accounts, which is the proxy number that we use to identify investors. Let me repeat that. 955,825 investors as at the end of March, representing more than 7% of the adult population. I think adult population is about 10 million people. Out of about 21 million people, 10 million people are adults. I'm sure in this room we are all adults. So we fit into that number. 10% of 10 million is about 1 million. So we are just shy of about 45,000 new accounts. I hope everyone here has an account. If you don't, contribute to the shortfall so that we can reach the 10% when we sit in here, when we look at the performance of the second quarter. I think this is massive. When we started reporting on this, we were comparing ourselves with Kenya and a few other markets. We had less than 60,000 people participating. So we hope that through you, the media, we continue to disseminate information about the possibilities of investing in the long-term market. So retail participation continues to positively contribute towards the growth. And that's what we need. And that means through you, our awareness campaigns positively affecting the inclusion of more and more people towards investing for the long term. The third market that we look at is the bond market. There are two segments of the bond market. There is the corporate bond market, and then there's the government bond market. We do have statistics for both. In terms of corporate bonds, and if you were following our presentation with respect to the money market rates, so the higher the money market rate, the less the corporates borrow, right? Because then they have to compete with the money market rates. So in terms of corporate bonds, we saw that 9.7 million kwacha was raised by the corporates in the quarter under review, bringing the outstanding value of corporate bonds to 5.52 billion hwacha. That's not a lot if you compare it to GDP, because that's less than $500 million. That's less than $500 million. We need more and more corporates to raise bonds for investment. Remember, we just talked about power plant getting financing for the Chisamba solar plant. Remember, in the last quarter review, we said CEC had raised $150 million. So that's a part of this $5.5 billion that we're talking about. So we need more solar plants funded. We need more infrastructure funded. So corporate bonds forms a conduit for directing savings to infrastructure development. That said, the other market under the bond market updates is the government bonds. Remember that the government bonds are issued by the central bank on behalf of the central government. The money doesn't go to Bank of Zambia. The Bank of Zambia is a mere agent for the government. With respect to the Securities and Exchange Commission, our mandate is on the secondary market side of things and not the primary market side of government bonds. We saw that the number of trades, remember we're talking about secondary market, the number of trades in the secondary market for government securities were 1,729 trades. I'm sure in the Q&A, my colleagues would have found the statistic of how much it was in quarter 4 so that we get to have like for like, and also quarter 1 2024 so that we can bring out the seasonality out of things, as it were. 1,729 trades compared to a particular number which my colleagues is still compiling for 2024. In terms of how the markets have been faring, and with respect to the help that we get from you, we can only grow and develop these markets with the help of the media. So financial literacy and investor education are key aspects of market development. We want people to make informed financial decisions. So we all need to go back to school. We thought we finished school, but we still have a financial literacy school to attend to. At first I used to think, but I'm educated. But then you actually find that you make decisions that appear to be different from what is expected of you in terms of making financial decisions. So every year, we do hold a financial literacy week because we strongly believe that in order to develop the market, we need to protect the investors. In order to protect the investors, the first line of defense should be the investors themselves. So having knowledge that helps you make informed financial decisions is the first line of defense, even before the policeman walks in. My favorite example is, even if you live next to the police station, still lock your door. So the first protection is yourself. So we have a number of school visits, and what we have started doing are deliberate efforts to go into and away from the line of rail so that the entire Zambia becomes financially literate and become educated, as it were. So we did visit a number of schools, which you were able to see in the detailed write-up that we have for you. And to see the effectiveness of some of these activities, we've continued to do surveys that shows that there was a 96% improvement in the stated areas of how the public understands investments. And in terms of confidence in investing, this grew to 72%, where we should be at 100%. Every person who has been to college, university, and other tertiary education should also have a bit of knowledge about how to use their salary. Part of it should be saved and later invested, and a percentage of it, of course, used for living expenses, as it were. Through the media, I think we get to see quite a number of situations. This is with respect to scams and fraud. Most of these are disseminated through social media. So we did notice or detect and issued one public warning on entities and individuals that were impersonating, including the commission. Somebody was audacious enough to use our logo and was supposedly selling an investment product. Unfortunately, some members of the public did fall for that. But again, we urge the media to help us disseminate that there is a channel through which you could reach out to the commission and other licensed players just to verify whether or not indeed the SEC was a fund manager instead of a regulator, and that they could receive investments. Unfortunately, one member of the public, maybe representing several others, did invest in such a scam, and we issued a public warning. So we've continued, and I hope we keep adding to the numbers. We've continued to hold town hall meetings every last Thursday of each and every month. And during the quarter, almost 6,000 people attended, or attended through Zoom or the Connecting Facebook, these town hall meetings. The real number is 5,964, which is almost like 6,000 people. That's quite something. But out of 10 million adults, I hope the other 9 million and something else are already financially educated and they do not need to attend to this. But our experience has shown that even well-informed individuals, well-informed, I mean by generally being well-informed, do fall for some of these scams and unfortunately get to lose their money. So 5,964 people attended. So our public awareness efforts continue to look at things like fraud and means and ways of prevention and safe investing. If the return being provided or offered or promised is too high to be true, we urge you, the media, to warn the public that anything that deviates from, for instance, the return or the yield on government bonds, you'll probably have to ask a financial investor. So government bonds, the yield is not more than 22, 23%. So if somebody offers you 60, 100%, I think you need to do more investigation. We also wanted to share with you that even as we were talking about funding for solar, we continue to work towards expanding green finance. And in that respect, what we've seen is one of the weaknesses or the gaps, maybe gaps is a better word, that we have in terms of other professionals participating in the capital raise process. One such key grouping is the law or the lawyers. So we signed an MOU with the Law Association of Zambia so that together we can interpret our laws, we can come up with guidelines in the green finance space, for instance, so that we can continue to raise the much needed finance. If you remember, the government, the president did issue a desire to ensure that we have 1,000 megawatts of power coming from solar farms by the end of December. So the question you should be asking the media is, how is the generation of this 1,000 megawatts going to be done? So one such source of funding is green finance. In terms of the capital market master plan KPIs, we'll be able to share with you in the main document where we stand with the KPIs, and I'll spare your time with respect to the detail, some of which I've already pointed out in terms of market cap to GDP and a few other figures. The usual question, and in closing, you always ask us, so what's the way forward? What do you look, what should we tell the public as to what to expect? So looking ahead, and in my closing remarks, a bit of what we think should help the capital markets to further develop. We see the continued stability and the resilience in the market. If we have stable exchange rates, the inflation rates trending lower towards the 6 to 8% target, we should report even better figures in Q3, if not in Q2. We will spend a lot of our time, especially with the near 1 million of people participating in the markets, to see that our scams awareness continues, so that we build investor confidence, so that more people can participate. We are going to launch our scams awareness campaign. I'm not sure how many of you saw the WhatsApp videos that we are sharing, I think over a 3-4 week period. We hope to see that on TV, so that more and more of the public can actually get to be aware. So we urge you, the media, to jump on board to help us reach the masses and the presence that shows a positive contribution to our market. We hope to be at the CAMEX. We hope to be at the trade fair. We hope to be at the Lusaka shows, so that we continue disseminating this information. So SEC remains committed to expanding market access. So digital access platforms and such media will be encouraged. SEC hopes to enhance investor protection through awareness, through you, the media, and promoting sustainable finance, like I said, the green finance, and building, through you, the media, a well-informed investor base, so that together we can grow the market, and with grown markets, the contribution to the development of our economy could continue. With those remarks, as politicians say, a few remarks, I thank the media, and now we can take questions. Questions?
For me, it's just a quick clarification. You say that the number of individuals participating in the investment has increased from somewhere around 60,000 to near a million.
So when was the 60,000 recorded?
Okay. Another question, yeah?
My question is on the government bonds trading activity.
Okay.
You said the number of trades stood at 1,729. So was this an increase or a decline when compared to the previous quarter?
Okay. Any other question? Yes?
Yeah, maybe a follow-up on that.
Okay, and your name? Can we rewind? Because I want to address real individuals and not my kids used to get mad when I say you. Say no, Dad, for the name.
Yes, I'm Andrew Mbenga from Times of Zambia.
Okay, Andrew, yeah. Then the lady who I found here at 6 hours.
I'm Cecilia Chilwa from Money FM.
Okay. Yes, sir. Then for
my name is Maingaida. I'm a journalist for Zambia 24. You indicated that the money market is generally stable and showing some kind of resilience. So I needed to know some of the conditions that have led to this.
the last one before we take it. Yeah?
Yes, Mayor Gerald from Financial Insight Zambia.
Sorry, the name again?
Mayor Gerald.
Amuyai. Okay, Gerald. Yes?
From Financial Insight Zambia. Yeah, so that's a follow-up on this question of the number of accounts at about almost 1 million. I was wondering how many of those local accounts, right? Zambians. Then on the bonds as well, I wanted to understand what is the value of the bonds that were traded in the previous quarter. Then again, on the same bonds, yields have been dropping on the primary market. I was wondering what's been happening on the secondary market. Are we seeing the same trend?
Okay, let's take the floor before we become. Leah should be able to take the first question, and that's on the numbers. Could you also take the question on the number of trades, which you have there, and then I'll take the money market stability and discuss the other issues with the values and everything else.
Thank you, CEO, and thank you so much for those questions. So for the first question, in terms of investors, and also just to note that when we talk of investors, it encompasses both individual and institutional investors. So the 60,000 that you made mention to, like CEO, I think in his presentation, he mentioned the 3 clusters in the market. So we have the equities, we have the bond market, and we have the collective investment schemes. So the 60 is falling under the equities market. So these are the investors that you find on the LUCE, so those that trade in the equities market. But the figure that we've given, which is almost touching 1 million, that encompasses our investors in the equities market, in the corporate bond market space, as well as the collective investment scheme. So when we total those up, that is what is giving us the 955, which is almost 1 million. So when we do give you the reports, then you'll be able to also see the movements. Then with regards to the second question on the government bond trading activities, so yes, as of Q2, we had 1,729 trades. So we recorded a 16% decrease from last quarter. So last quarter we had 2,056 trades. Then year on year, we had a decrease of 2%. But here is the interesting bit as well. In as much as we recorded a decrease in the number of trades, when we look at the to hear market value. How much was realized? The market value increase, we recorded a 39% increase. So that means that even though the number of trades may have been declining, the value of what was being traded was actually getting bigger in terms of transaction size. I think those are
Yeah,
the two.
whilst I'm answering the next question, I would want us to address Mubanga and anybody else, Bruce Elsa, somebody would have the statistics. There's something that is called seasonality. I never used to understand it until I got out of school, why the statistics lecturers always insisted on seasonality. There are always seasonal factors that gets to affect activity in most of the economic activities. So whilst what Leah has provided is Q4 versus Q1, I think we have statistics in our database of Q1 of 2024. Whilst it's good to compare quarter to quarter, it's also good to compare the same quarter the previous year. Just in case people, because they get bonuses in December and then they get to spend more or invest more. Then in January or the first quarter, they're paying school fees and other things, or coming out of the festivities, they invest less. So we really need to see the seasonal aspect of this. By the end of this brief, I want one of my colleagues to just maybe delve into that so that we do not paint so that we paint an accurate picture of what it was in the same quarter last year. Mubanga, you have the figure?
Not off cuff, but maybe just to speak in retrospect with regard to some interventions that have probably contributed towards increasing the number of investors. I think you mentioned for the CIS about 60,000. If we look at the previous strategic plan, there were a number of regulations that were revised and updated to propagate growth in the CIS sector. So the pension schemes, for instance, can now invest investment schemes from about 2% to now I think 20%. And then also there's been a lot of efforts around investor education from the previous strategic plan and also carried on into the current strategic plan, which is also focusing on CIS as a growth sector. And in that regard, there's a lot of emphasis on how people can save and invest through the CIS markets. And I think also another one would be some of the interventions around the CMMP, which will also be targeting growth for the CIS. So just to speak to some of the interventions that can probably speak to the increase in the number of investors.
But I still want the media to go out with what were the number of trades. We have this, I know we have it, the number of trades Q1 2024. I want us to get back in there. Let me address the issue of the money markets. Remember what I said is our interest as a capital markets regulator is in the stability of exchange rates, lower inflation, and lower money market rates. And I did speak to the fact that we seated at about 5 billion of corporate bonds. We should have had a higher figure there, but look, if the government bonds rate, which is in the money market, could guarantee you 22%, which means the private sector can only raise money if they offer more than 22%, because there's a risk aspect to this thing. But 22 for the private sector is already high. So the private sector is likely to borrow more to invest in their companies if the rates are lower. So government should probably be borrowing at, let's say, 12%, so that the private sector could go and borrow at 12% plus a margin, because that's the way it is. But then what we did allude to is the fact that the yields in the government paper has been going down from the highs that we saw over 33 years ago,
to just about 21.20. So there's a downward trend, which is good. So from our aspect, then we are getting the results that we need. But generally speaking, we say that in March, I think the depreciation of the kwacha was only about 1%. I mean, in the first quarter. Compared to the experience of last year, this is far much more stable than what we saw before. So it becomes easier to plan. And then, of course, from the statistics authorities, we saw that inflation for the first time in that quarter went down from 16.7 to about 16.5. And remember what we say is, if you have a fixed income, fixed return, fixed income security, your return is fixed. This is like a salary, right? Most of our salaries are really like fixed. So the higher the inflation, the less we buy, because the salaries don't change on a monthly basis. So the same happens in the capital markets. If I invest in a bond offering me 20%, if inflation goes up to 16, that means my real return is only 4%. Because the other 16% is only compensating me for the value. So my real return is 4%. So the lower the inflation, the higher the real return that I'm getting. So that's the stability that we've seen, because the yields in the market, money market rates, have tended in the last quarter to be going down. So in terms of the local versus the foreign, we can get that data, but what we can say is that the majority in terms of numbers are locals. Over 67% of the accounts are owned by locals. Mind you, the foreigners are mostly trading through nominee, what we call nominee accounts, where they open up an account with one of the nominees, and then what we get to see in the numbers is just one account. But in terms of the value, if we are to dissect the value, the nominees trade huge amounts, because it's more or less like an aggregated. It's like people traveling on a bus. You only see one vehicle, but there are 60 people there, versus the 1 or 4 people in a car. So that's probably the value of the 60 people in the bus is far higher than the salaries. We're looking about average. The salaries in the car with 4 people. So that's what we get to see. So even when we do dissect, we see that the nominees generally get to trade higher values because they're aggregating versus the individual market. You also asked about the secondary market yield versus the primary market yields. I think this is just mathematical. What gets to happen is, if I'm holding on to a security which I bought 3 years ago and the yield was 25, when the markets are going down now, it's just logical that there's higher value ascribed to 25. How else can I put it? So what gets to happen is generally the prices then get to go higher for the higher yielding security, right? Than the securities that are offering lower rates. I'm trying to really break it down. If somebody is able to borrow at 21%, or if there's a paper that is only offering 20% or 21% versus a paper that is offering 25%, which one gives you more money? The 25%, right? So the price for that is higher than the price for something that is offering a low yield. So you will expect that there is a movement in the yields with the secondary market. But what I can say through the media is for almost, we're seated at almost a liquidity of something like, it's also here, 42% of government securities traded. So I think using the central bank statistics, you see that government paper was seated at about 170, 172 billion of that 42% trading. What does that mean? What that means is that it's possible now on our markets for you to put your money meant for school fees in September in a government securities in January. And in September, you can easily walk to your financial institution and sell your bond and be able to pay the security. That's the situation we should hope and we should fight to get to. So once we get that liquidity, it's possible then to buy a bond on a Monday and sell it the next Monday. You would have probably made a few purchases rather than putting the money in your pockets, as it were. So, I mean, every return matters. From a financial speak, if you remove one kwacha from 1 billion, you no longer have 1 billion, right? So, for you to get 1 billion, if you are at 900 and something, you need to get the extra 100 kwacha. I think this is an aspect of it sometimes only treasury people get to understand. If a car is costing $100,000 and you have $99,000, you won't be able to buy it. So if you can invest the $99,000 to earn $2,000, then you'll be able to buy the car. Does that make sense? So that's basically what we are talking about in terms of yields and return. Any more questions? Yes, sir. Your name and...
My name is Justin Piri from Zambian Business Times.
Okay.
I have two questions. So the first one, it is observed that company listing has continued to be a challenge. Do you have any new listing in the pipeline, and what are some of the measures that you've put in place in order to jumpstart the listing? Then the second question is, there were 2 branches last month that were reported for delayed submission of financial statements. So just want to find out, in the name of Zambian Breweries and Butter and Should Be Madison, I just want to find out what are some of the sanctions that apply for delayed submission of financial statements.
Any other questions? Can take 1, 2 more. Ladies are encouraged to apply. Okay, whilst you're thinking through those questions, I think Mr. P, very, very good question. I'll start with the last one. It's an interesting one. And the issue is, the question that you should also be asking as a media is, we're treating this as a learning process also, is why the financials ought to be published. It's about, we want investors to make informed financial decisions. Let me put it in a different way. If I have money in a particular venture, I want all disclosures to be made on a timely basis. So I either keep my money there or I move it out. So any delays in publishing financial statements robs investors information important for them to make informed financial decisions. I think that's the general comment I wanted to make. Now, the primary regulator with respect to listing is the exchange. There are 2 ways, there are 2 levels, not ways. Securities are registered with the commission, which is the SEC, but then they are listed on a securities exchange. So what we've done as a market, and most of the markets worldwide, is where you register, where you list the securities, they have the primary and first line of questioning the need to have the financial. So they will say, yes, in their listing requirements, they have sanctions with respect to delayed publication of financials. In fact, if you read through the Securities Act, we do not have a dispensation to allow anyone to have their financials published late. They cannot even apply to us because there's nothing in the law that allows us to have financials published late, because the law does recognize the importance of timely information. So that question will be very, very specific, put to the LUCE, but what I can confirm is there are sanctions that say met with respect to delayed submission of financial. But I'm also glad that the media is noticing and asking questions about which of the 22 listed companies failed to submit accounts. But then I'll also take and give back the challenge to you to ask the listed entities why they have delayed and inform them, the public. Because this is like financial analysis, right? You should be doing financial analysis and say, and get to inform the public with respect to the impact of failed or delayed publication. In terms of company listings and the pipeline, that's one of the biggest challenges. Let me address it this way. The majority of business entities in Zambia are SMEs. Over 90% of the businesses in Zambia are SMEs. And it is a fact that they need financing, they need capital, but it's also almost a fact that they are not in a state and size that is good enough for capital markets. So what we have in the Capital Markets Development Master Plan is to look for alternative means of achieving the same purpose. What's the purpose? Raising finance. So we are looking at alternative ways of raising finance, which can and should go to the 90-95% of the businesses operating in Zambia. But then we constantly are approaching, especially the LUCE, the businesses that seem to be ripe to get into the listing. Listing is a choice, it's a business decision. There's absolutely no legal requirement to list. I think that's what I can say for now. Mubanga, you want to add?
Maybe just to add the current development, which probably you will see. So through the Capital Markets Master Plan Working Group, there's a deliberate effort being made to create a task force that will expand both the public equity and debt markets. So basically we're working with the ZDA, and it is envisioned that that task force will comprise also the LUCE as a lead, and also the involvement of business associations. So the idea is to build a development pipeline of these companies that will eventually raise money through the public equity and debt markets. So I think terms of reference to that effect have already been developed to create this task force.
Any other questions? I see none. Any other question? Any other announcements, Charlie? You have any? Questions going once? Twice? Thank you very much for coming through to the SEC. We hope to see you at our next media brief for the Q2 results. We appreciate your time, and we hope that together we can not only develop the capital markets, but positively contribute to the growth of our economy. Thank you very much, and have a good morning.
Thank you. Thank you for making your time. I would like you to small snack.